welcome to the CNBC TV18 Investment Guide. I'm Surabhi Upadhyay. Has COVID permanently changed the way in which we consume, how we are going to buy things, what we need, our travel patterns, our spending patterns? If that's the case, then are businesses in the consumer sector seeing permanent disruption? Will there be new leaders? And if all of this is worth thinking about, then you also need to think about how you will invest in the consumer sector. What should the approach be in the post-COVID world? That's what we're discussing, and we have two experts to help us decipher some of these issues. Joining in is Abneesh Roy, who's tracked the consumer story of India for many, many years. He's the Vice President at Edelweiss Institutional Equities. And also with us is Sonam Udasi, Senior Fund Manager at Tata Mutual Fund, who, among other funds, also looks at Tata's consumption fund, the Tata India Consumer Fund. Thank you very much, gentlemen, for joining us on the show. And it's going to be great to hear some perspective from you. So the first basic question, Sonam, to you, are we seeing a big disruption? Is COVID really changing things for good?
I think there are two key changes. One is, of course, the consumer behavior, where, the focus is buying essential. And keeping discretion on the back burner for now. But the bigger, I think, change, which is, I think, more sticky, is how, the companies are looking at this. We were anyway going digital, and this space has picked up. So the companies are not, whether you're a big company or a small company, it doesn't matter. You have to have an online presence, have to have an e-commerce strategy. And you have to have the ability to talk to not only the customer online, but to also have your supply chain, which is digitized, where you can have real-time inventory, sense of what's moving fast and what's not, and how do you change that very, very rapidly. So it's becoming smarter, and it's here to stay.
Okay, that's an important point as well. Yes, absolutely. Digital technology has had a huge role to play in the way we are accessing services and products, and that's something we'll talk about as we go forward as well. Abneesh, opening to our thoughts with you as well. I think, when it comes to consumer stocks, everyone's trying to figure out which are the companies that can see outsized growth as we get through COVID and get over COVID, and which are the ones that could perhaps see, maybe a permanent loss of demand or at least permanent disruption. Your thoughts?
Sure. Thanks. Good afternoon to everyone. So I think pent-up demand will be there. In wave one also, we saw many discretionary segments saw pent-up demand. So I think that will again happen this time. Of course, there are further nuances here. If you remember wave one, we saw paints, adhesives, waterproofing, jewelry, QSR, home decor, etc. do exceedingly well. My sense is in wave two, we will see a recurrence of that. Over and above that, multiplexes should do really well, because as most of the urban India is getting vaccinated, and we also have hopefully a lot more herd immunity than earlier, plus international box office has opened up, which is, I think, a key criteria for Hindi movie release, which did not happen in wave one. So I would expect the multiplexes also to get added there. Permanent disruption definitely will be there. Retailers who have very little private label, for example, plus have very low e-commerce, I think they will really suffer even when things become a bit more normalized. For FMCG companies, I think rural demand has got a bit derailed because of the wave two. I would expect that to come back because of very good monsoon. So I would say there are multiple themes to play even in wave two in the next 2-3 quarters time frame. Yes.
Okay, it's really interesting that you're positive on the cinema stocks, because that's where the big debate was, that whether there is permanent disruption there, whether OTT is really the new way to go. But that's an interesting view. Sonam, come in on this and also expand on that point that you made on digital. How is that likely going to, let's say, shape your thoughts as a stock picker, as a fund manager, and what is your take on discretionary consumption? What would you pick? What would what's a strict no-go for you?
So I think it is very, very important. See, India is a very young nation, and most of the youth now, whether you are a tier 3 guy or a tier 4 guy, it doesn't matter. You are aspirational. You have to have that kind of connect with the youth on the digital platforms. So any theme that is not talking to you online, you need to have that. So whether it's online aggregators on restaurants, whether it's QSR, whether it's actually searching of jobs online, or online ticketing, those are all important aspects to have. And there are, in fact, there are companies who are creating brands only for online space. So we are excited by that. These are very fast-paced growth segments. Penetration levels are low. Ultimately, per capita, it's a play on rising per capita income. So if per capita income, which is sub $2,500 for India today, and in next 7 years we are going to double, anything that is aspirational and is talking to the youth is the segment that we would want to look at.
Okay, just to follow up, Sonam, on this, you mentioned the online model. Now, in the listed space, there aren't too many of these plays available. I mean, you have the quasi-digital tech companies, or maybe something like an InfoEdge. But how else are you looking to sort of distill down to the listed universe some of the points that you just made?
So there are, fortunately, there are 4 or 5, companies that we can look at that way. But more importantly, even on the listed space, which we call the traditional FMCG or discretionary companies, all of them have a digital strategy. All of them have either products that are aligned to that, class of customer, or are, trying to find efficiency through their backend by having this digital strategy. So it gives you a moat on profitability as well. It keeps your costs under control. It makes you what we call TAT. Your response time to customer is very, very fast. So any model that is looking to that, any company which has a strategy around that, that is what we are excited by. There are many things to look at really within this.
Oh, okay, that's really interesting. Gives us a peek into Sonam's mind. He's looking for consumer companies that can leverage technology really well, whether it's to reach their customers, whether sort of product innovation and things like that. Abneesh, so now let's map this with what's happening on the discretionary side. And my question is very simple. Will the old stars, the Page Industries of the world, will they really make a comeback? You've already made a strong case for the cinema stocks. I'm guessing PVR is something you like. What else? I mean, QSRs. Look at Jubilant FoodWorks. It's just dominated everything else. And then there are a lot of new listings in QSRs. Do you find enough sense and value there?
Yes, definitely. QSR is extremely interesting because customers focus on trust plus on healthy products will continue and will become even stronger. Plus, there has been a huge market share gains against the unorganized because they have gone through much higher impact because of wave 1 and wave 2, while QSRs were very quick to adapt and take e-commerce and home delivery to the next level. We will have a Page much lower in terms of pecking order because the competitive intensity is definitely there from Aditya Birla Fashion and other players. Page is doing a commendable job. But on current valuation and the risk from competition, we'll prefer QSRs, we'll prefer PVR and Inox both. We also like Titan a lot. If you remember in wave 1, the company which bounced back the first was Titan because expensive marriages are not happening because of the restrictions. Plus overseas trips are not happening. So we are social beings, so we will need to enjoy. So what we are seeing is definitely much higher outlay toward jewelry is happening. Gold prices have also done well. So Titan, QSR, and multiplexes in discretionary, plus paint, Asian Paint. These are the 4-5 stocks which we really like in the discretionary consumption.
Okay. You mentioned the valuation word. That's always a tricky game when it comes